So today we are discussing the prime entry books. This is chapter 4. Right. In chapter 4, there are several subtopics. These subtopics comes with the accounting process. Right. So we initially start the accounting process with collecting the source documents. Once you collect the source documents, we identify the transactions. So once we identify the transactions, we have to record those transactions in several initial set of books. So those are cash, receipt and payments, purchases and sales, purchases return, sales return, general journal. Then once we record them in the prime entry books, we post them in the ledger accounts. So ledger accounts are prepared in the general journal. So in general journal, there are two types of journal. One is general journal, the other one is once we are done with recording in the prime entry books, we post the transactions in the ledgers. And there are two types of ledgers. One is general ledger, other one is sub ledger. So when we are preparing the sub ledger, we used to take the transactions for the control accounts. So later I will discuss what is a control account and how do we prepare general ledger and sub ledger. And another subtopic is bank reconciliation statement. So this is prepared when a company or a business is maintaining a current account in a commercial bank. So when they have a current account in a commercial bank, all the transactions which they do through checks will be recorded in the bank. So end of the month, we will get a bank statement. So we compare the bank statement balance with our book balances, cash book balance. So that is called reconciliation. And we also have another subtopic, which is error corrections. Okay, so all these comes under prime entry books chapter. Then we are discussing a past paper, 2017 A-level paper. So in this question, they are requesting us to prepare the prime entry books, right? So here we can prepare the cash receipt journal, cash payment journal, purchases day book, sales day book, return inward day book, and return outward day book. Okay, so read the question and draw the formats. Cash receipt journal, payment, purchases, sales, return inwards, and return outwards. This is a basic question. Okay. So let me know once you're done so I can start the question. Okay, so let's start. Make it fast. Okay. Cash purchases. So when we purchase, we pay cash. Then the cash uh, payment journal, 2nd of January. So it goes to the cash payment journal. You can record it as well. Cash purchases. Voucher number 1, cash purchases, amount 200. So you can categorize under cash purchases. Number 1, 200. Cash sales. We are selling on cash. So it's a receipt. When we are selling on cash, we get cash. 8th January. Receipt number 1, amount 300. We categorize it under cash sales. Then credit purchases from Nimal. Purchasing on credit. This goes to the purchasers table. Purchasers table. Then Nimal, 10th January, 500,000. So all the values are in 1,000. Don't forget to write thousands on top of the statements, journals. Thousands. Then the next transactions, return of goods purchased from Nimal. What we purchased, we are returning. What we purchased, we are returning. So it's return outwards. We are sending back to Nimal. Return outward journal, 100,000. This is a very basic question. Okay, I'll give few minutes. Can you all complete the remaining transactions? Yes. So you are identifying the type of transactions and recording those transactions in the correct prime entry book. Okay, so we'll make it fast so we can through many areas in the chapter. Return of goods. Okay, cash purchases. Cash purchases. It's cash payment journal. 400,000. Cash purchases 400,000. Credit sales to David. It's sales day book. Sales day book is here. Sales day book. Payments to Nimal after receiving 20,000 discount. So we get a discount of 20. Okay, we get a discount of 20 and receive 100 and paid 180. So total amount of the supplier is 200,000. Out of 200,000, we paid only 180. Out of 200,000, we paid only 180. And 20 discount. It's a cash payment. Paid Nimal. Paid Nimal 180. So it comes under the creditors column. Comes under creditors column. $500,000 is credit sales. They are not asking the general journal, so I didn't prepare the general journal. Right? This is actually cash payment, so it won't come under general journal. If any transactions come general journal, I will explain. Next, credit purchases from Anura. Credit purchases 300,000. Purchases day book. Purchases day book. Sales Nayagam. Sales day book 400. Sales day book 400. Then the receipt of cash from David. We receive cash from David 400. This goes to the cash receipt journal. From David 400,000 from debtors. 400,000 from debtors. Payment to Anura after receiving 10,000 discount. So we received 10,000 discount and paid 290 cash payment. Payment journal. Then the last transaction is receipt of cash from Nayagam after allowing 20,000 discount. So we are giving a discount, which is called discount allowed. Discount allowed. Discount allowed. Okay. Right. One transaction I missed. Return of goods by Nayagam 150. So it's a return inward. It's a return inward of 1. All right. Now, can you all get the total of each column? Total of each column. Right. So this is how we prepare the prime entry books. The next question is in the general ledger, purchases, sales, creditors, and debtors control accounts. From this, now let's prepare debtors control account, creditors control account, sales account, and purchases account. Draw this ledger accounts. Debtors, creditors, sales, purchases. They are asking the 4 ledger accounts. In the general ledger. You can draw a T account, it's all right. No need to mention date, description, amount. You can just draw a T account with the space. It's not an issue. Okay. Now, let's do the transaction. Let's record the transactions in the ledger accounts. So remember, these debtors, cash sales, creditors, cash purchases. So this you can record the total amount, the bulk amount. Right? You can record the total. And these purchases, sales, return inward, return outward. These also you can take the total amount, the bulk amount. Now use your double entry knowledge and also discount. Discount also you can take the final total. So whatever I have highlighted in yellow, only you have to record in the ledger accounts. Okay, so let's start with these purchases, sales, return inward and return outward. Purchases double entry, purchases account debit. I'm doing the credit purchases. Purchases account debit. purchases debit. Okay. Date, the month end 31st January. Description, creditors 800 and creditors account credit. Creditors account credit. Purchases double entry. Purchases account debit. Creditors account credit. This is a double entry. Credit purchases 800. If you have any doubts, you can ask. Then the sales 900. Double entry for sales. Sales account credit. This is credit sales. Sales account credit and debtors account debit. Debtors account debit 900. Sales account credit. Debtors account debit. Then the returns. Now we have return. I'll draw the return accounts also. Okay. You can understand. This is return inward, sales return. Return inwards 150. Return inwards. Debtors account credit. Debtors account credit. Return inward account debit. $150. Return inward account debit. Debtors control account credit. It's the double entry. Then return outwards. Return outwards. Creditors account debit. Return outward is credit. Yes, creditors account debit. Return outward. $100. Send this. Then there are other transactions from the cash receipt and payment journals. Let's do the receipt. Debtors, from debtors 630. Cash. 630 received from debtors. Cash account debit, debtors account credit. Discount also, you have to credit debtors and debit discount allowed account. So you can prepare a discount allowed account and debit the discount allowed. Then there is the cash sales. Double entry for cash sales is cash account debit. This is the cash account and this is already done. Debit. Sales account credit here. Sales. We have to credit sales. 300. 300 sales account credit. Then moving to the cash payment journal, creditors, paid to creditors. When you pay, cash account credit and control account is debit. Control account is debit. Then discount is also, we have to debit the creditors control account. Discount received account credit because it's an income. Finally, there is cash purchases 600. Cash account credit, purchases account debit. So there are two items in the purchases. Did I miss anything? Return outward here and here. What is the question? Do we enter return in purchase? There is a question. Do we need to enter return inwards and return outwards in purchases and sales account? No, we don't record return inwards and return outwards in purchases sales account, right? We record in a separate account, and when we are preparing the income statement, we show sales minus the return. From now, total sales 1100, from that 150 return. So that next part I will explain how we take this in the income statement, right? We are not taking inwards and outwards into sales and purchases accounts. Okay, can you calculate the closing balances of each account? They want the closing balance carried down. This is 100 creditors, 200 . $1,100 sales that goes to income statement, and this is 1,400. Okay, take the closing balance. Then we need to calculate the gross profit. So from the ledger accounts, you can take the balance and prepare the income statement, the trading account part. Find out the gross profit. Can you all tell me how much is the gross profit? How much is the gross profit? Can you tell me how much is the gross profit? Sales total 1,200. Total sales 1,200. Then there is a sales return. Return inwards 150. It has to be deducted. So net sales will be 1,050. Opening, there is no stock. Purchases 1,400. Return outwards 100. It's return outward of 100. Closing stock. In the question, they have said a separate point. The cost of inventory as at 31st January is 300,000. So we can write 300,000. So gross profit is 50,000. Gross profit is 50,000. Now I will move to another area. Another important part. Control accounts. Let's do some questions from control accounts. Okay. So control accounts. So let's understand the basic. Let's understand the basics of control accounts before we move to the questions. As I said earlier, the ledger is divided into two: personal ledger and impersonal ledger. That is general ledger and sub ledger. A general ledger is where we have all the T accounts. It's a common place. Sub ledger means it is prepared to show separate individual accounts. In sub ledgers, there are two main types: creditors ledger and debtors ledger. Sometimes there can be a stock ledger and any other ledgers as well. So this is how we show the difference between the general ledger and sub ledger. Now here you can see, once we record the transaction from prime entry book, we prepare the general ledger using the double entry system. So in general ledger, we have the debtors control account and creditors control account. These are control accounts. In sub ledgers, there will be debtors control account and creditors control account. Here, this is debtors control account. So here we have individual accounts A, B, C, individual. But in the general ledger, we have a total account, total debtors account. Creditors account also same. This is what we have to study under control accounts. Then what is a control account? It is an account in the general ledger where total transactions recorded in individual accounts maintained. In control accounts, we have the total amounts. This is the format. Sales ledger means debtors. Okay, I'll explain this again. This is purchases ledger, means creditors. Okay, so let's do a question. Let's do a question. Just understand the format. There is a question. Creditors and debtors controller. Okay. The following particulars have been obtained from the books of Gamma traders. Data balance, credit balance. Credit purchases, sales, inwards, outwards, discount, payment receipt, bad debt, doubtful debt. Okay. Can you put these transactions into the control accounts? I just show how to write the debtors. Opening balance, balance brought forward 650. Creditors. $800,000. Okay, I'll give few minutes. Can you complete this and find out the closing balance of debtors and creditors? Closing balance. Identify the closing balance. Okay, so this is debtors control account and creditors control account, the basic format. We are trying to understand the basic structure of the control accounts. Credit purchases goes to creditors control account. Okay, so credit purchases 950,000, credit sales 890,000. So that will be debited to the debtors control account. Then return outwards. Credit purchases, credit sales. Return outwards and return inwards. Return outwards will be debited to the debtors control account. Return outwards. Return inwards, credit to the debtors control account. Discount. Discount received will be debited to the creditors control account. Discount allowed will be credited to debtors control account. Okay, complete and tell me the closing balance. What is the closing balance? Doubtful debts won't come here. Double entry for the doubtful debt is doubtful debt provision for doubtful debt account credit and the income statement debit. So it won't come here. Sometimes there are transactions they just give to confuse you. Cash paid, cash received. Cash receipts. cash paid. Right, there is another important transaction which says set off against creditor with debtor. So when we set off a debtor with a creditor, debtor balance also reduce, creditor balance also reduce. So reduce means debtor's account will credit. Yeah, debtor's account will credit. And creditor's account will debit with the same amount. Set off. Set off a debtor against creditor. Right, set off means now there is a person, right? We purchase from him. He is one of our supplier, and also we are selling to him. He is a customer as well. So same person we need to pay, and we should receive from him. Right? Let's say I have to give you 100,000 and you have to give me 100,000. So what can we do? We can set off. So I don't need to pay, you also don't need to pay. Setting off a debtor with a creditor. Right? Setting off. Next. Check received from a debtor return. When you receive a check, it was credited here. When we receive a check, right? Then if it is returned, this balance will increase. So this will be debited by 25. Right? Returns, check return means now, let's say this is our data balance, right? This data is giving us a check. So if he gives a check, debtor's account credit, bank account debit, right? If the bank return due to insufficient balance or maybe any other reason, if the bank returns the check, then Again, the bank account will be credited and debtors account should be debited. Debtors account debited 25,000. Debtor balance increase. Okay. Debtor balance will increase. Then same thing applies for checks paid to creditor return. Then the creditor balance also will be credited, increase 45,000. Right. So the next item is bad debts. So bad debt means from the debtor, we are not getting money, right? Maybe he is dead or he is bankrupted. So we can't collect the money from the debtor. So what happens? It is an expense. So we have to credit the debtor's control account. We have to credit the debtor's control account. Bad debt, 35,000. 35,000. Okay. And the doubtful debts. What is mean by doubtful debts? Doubtful means we are not sure about receiving from the debtor. So we make a provision. So we call it provision for doubtful debt, which is an expense, and we create a provision. Double entry for doubtful debt is doubtful debt account debit, provision for doubtful debt account credit. So it won't come to the debtor's control account. So remember, only bad debt will come. Doubtful debt won't come to the debtor's control account. And if you calculate the closing balance now, how much is the closing balance? Okay. So closing balance. Debtors. Yes. 967,000. And good. Creditors. 1,181,000. There is a question. So can you explain the set off part again? Now set off. Set off part, let me explain. Now let's say there is a person is Mr. A. Okay. Now this is our business. We purchase from him 100,000. He's a supplier. We purchase raw materials from him 100,000. And meantime, we do sales 100,000. Now he is becoming a customer. He is a supplier as well as a customer. So what we can do is we can set off this with this. So the balance becomes 0. Then creditors account debit, creditors also reduced, and debtors also reduced. Is it clear? Set off. All right. Now we'll do another question in order to understand the general ledger and the sub ledger. General ledger and the sub ledger. It is very important because then only we can do the questions from reconciliation part. Okay. Oh, this is the question. Example, you are given the following information relating to debtors of Malit's business for October 2013. There are 4 debtors. Right? There are 4 debtors. Nuwan, Lakmal, Lalit, and Kumar. Opening balances, credit sales, return inwards, cash received, discount given. You are required to prepare debtors control account. So this is the control account. Control account. So for the control account, you have to take the total. Opening balance means you have to get the total of this. Sales also total, return inwards total, received total, discount given total. And prepare individual accounts. So individual account means you have to draw single, one by one, individual accounts. Okay, individual accounts for 4 debtors. Okay, I'll give few minutes. Can you all do this? Take 5 minutes and complete this question. This is control account means total. Individual accounts, you have to take individual transaction. For example, Nuwan opening balance is 15,000. Then sales is 53,000. So likewise, you take the individual amounts. You can draw the T accounts. Yes, it's okay. Okay. Okay, so what is the total? Your calculate. Debtors control account, check the answer. Are getting 98 200. 98 250. I'm not going to do one by one because we have to do more questions. But check the answer. Individual accounts 38,000, 51,000, 19,500, 39,750. And finally, you have to do something called debtors list. So in this debtors list, you have to take the closing balances of each individual account. And the final balance should be equal. This 250. That's 258,000. Yes. So Nuwan 38, Lakmal 51, Lalit 39,750, and Kumara 19,500. So finally, this total should be equal 148 to 50 and 148 to 50. So always the individual total balance should be equal to control account total balance. So if there is a difference in these two, then only we do the reconciliation part. So in reconciliation, we prepare adjusted control account and the reconciliation statement. Okay. Do you all want to do a creditors control account? Or shall we directly move to the reconciliation part? Creditors control account also same as debtors control account. You can prepare individual accounts and the total yourself. Right. Let's do a reconciliation then. Okay, because it's a basic thing.
Okay, sir. Let's move.
Yeah. Good. So this is where most of the students have doubts, reconciliation. Okay. So let me explain how the reconciliation works. Right. So it's our question. Okay. This is what we do. Now let's assume some errors. Error 1. The error is credit sales 250 8,000, 258,000 recorded as 208,000 in the control account. Okay, very important, right? Give your full attention to this. Give your full attention to this. This is a very important point. Now, you can see okay. So here the credit sales actual amount is 258. But the error is this is recorded as 208,000. So let's do the error 208,000. Now what happens? Now you compare the balance. Now you compare the balance. This is 98,250 and this is 148,250. What you have to do? How do you correct this? If credit sale of 258 recorded as 208 in the control account means what you have to do to correct this? If the error is in the control account, you can correct it. How do you correct this? Tell me. You have to debit 50,000 here. Because 50,000 less. The debtors control account is 50,000 less. So you increase 50,000 to the debtors control account. Is that clear? This won't come to the reconciliation. If the error is from the control account, we can correct it through the adjusted control account. It won't go to the reconciliation. Okay, now this is here. All right. Now let's take another example. Go back to the normal scenario. 258,000. Let's take another error. This is error 1. Now another error 2. Error 2. Cash received 156,500 recorded as 256,500 in control account. How do you correct this? Tell me, how do you correct this? This is an error in the control account. So this should be adjusted in the control account. Debit or credit? Now, if you record 156,500 as 256,500. Now this is more credited. Credit more. That means the debtor account is deducted more. Debtor account is credited more. Only 156,500 you have to deduct, but you have deducted 256,500. So credited more means you have to debit. How much you have to debit? 100,000. Then it becomes 148,250. Debit in the adjusted debtors control account. Okay. That's how we correct it. This is very important because now let's take an error in personal account. Okay. 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 Sales to Nuan 53,000 recorded as 153,000 in Nuan's account. Okay, sales to Nuan 53,000 recorded as, yeah, this one recorded as 153,000. Then what happens? It won't affect the control account. So if it is not affecting the control account, we don't touch control account. We don't touch control account. Okay. So this has to be corrected. This has to be corrected in the debtors ledger. So we assume that now you are preparing the general ledger. You assume that you are the one who is preparing general ledger. You are the accountant. You prepare the general ledger. And assume that this is done by someone else. Just debtors ledger is done by someone else. So you can't correct it. Okay, you are doing the general ledger. So if this is 153, then what happens? If Nuan's personal account increased by 100,000, then Nuan's debtors list balance also will increase by 100,000. So this becomes 138,000. Right? Earlier it was 38,000. Earlier it was 38,000. Now 100,000 increase means Nuan's personal account balance increased by 138,000. So if it increased by 138,000, 100,000, total debtor list balance is 248. So this is 148. Debtors ledger balance is 248. Okay. Now what you have to do is you have to prepare a debtors reconciliation statement. So I'll draw the format of reconciliation statement. It's a very simple format. Let's take this format. This is the format of reconciliation. Okay. Now, balance as per the cash control account is this 148. 148, 250. So error is Nuance personal account increased by 100,000 sales. So debtors list balance, this answer should be 248. The answer here should be 248, 250. Right? So what you have to do to get the answer as 248, what you have to do? Do you need to add or deduct? Tell me that. Control account balance is 148, 250. Debtors list balance is 248, 250. So to get the balance as 248, what you have to do?
We should it.
You should add. Correct. So very simple. So you add. This is Nuance personal account debited. So you can write cash received 156, recorded as 256. So this balance now 248, 250. So what you have to remember is, now I'll give the summary. You can write it down. You want. I'll give the summary, right? Error. So the error. Write this summary. Write this summary. We have debtors control in general ledger. We have debtors control account. I'm doing for control account, debtors control account, same thing apply for creditors control account as well. General ledger. Then the debtors ledger, or we can say sub ledger. So, debtors ledger. We have individual accounts. Individual accounts. So this is control account and here individual accounts. Okay. Then we compare the balance. This balance with the debtors list balance. Okay. We compare these two balances. If there is a difference, then we have to reconcile. Let's say here the balance is 100. Here the balance is 200. And here 50. So there is a difference in these two balances. Then if the balance is from the control account, the reason is from the control account, then we have to correct it. We have to correct it. Correct. How are you going to correct it? Through adjusted control account. There's a power part. Okay, so we correct it. If the error is from the control account, we have to correct it. If the error is from the sub ledger, then we have to compare. We have to compare. Okay, so how are you going to compare this? Through the reconciliation. Okay. So how do you reconcile? Reconcile means if due to the error, if sub-ledger balance is more, then you have to add. Add in plus. Due to the error, if the sub-ledger balance is more, then you add, because you are going to get the sub-ledger balance. More means add. If the sub-ledger balance, if sub-ledger balance is less, then minus. So this is what you, this is a summary. Yeah, copy this summary. Copy this. Okay, there is a question. So can you explain it again? Yes, I will repeat this. Now we have general ledger and the sub ledger. Right, in general ledger we have the control account. In sub ledger we have individual accounts. Then if there is a difference between these two, debtors control account and the individual account, if there is a difference between these two, right, if there is a difference between these two, you need to see from where the difference comes. If the difference comes from the control account, if the reason is control account, like in our example, the sales value, like in our example, first example, 258,000 recorded as 208,000. So then what you did, we adjusted, we corrected in the adjusted control account, correct through adjusted control account, correct through adjusted control account. If the difference is from the individual account, like in our example, this sales to one, if it is in the individual account, then you have to compare plus minus, right? Compare plus minus. Due to the error, if the sub-ledger balance is more, then you add. Now here, see what happened. Sales 100,000 recorded as 100, sales 53,000 recorded as 153. So due to this error, the debtors list balance is more. Then you add. If the debtors ledger balance is getting less, then you have to deduct. Right? Let's say I'll take another example. Say we go back to the normal value. It was 53,000. Right now there is no difference. There is no error. This is also 148. This is also 148. Okay. Now these two balances are same. Now I'm going to take another error. The error is error number 4. Cash paid, cash received from Nuwan 25,000 recorded as 250,000 in Nuwan's personal account. Tell me what you should do for this. Then what happens? This is recorded as 150,000. The 250. No, we'll take 125,000. 120. Just tell me, will you? I am not doing anything. Tell me what is the answer. Tell me, is it recorded in the adjusted control account or in the reconciliation. And if it is in the reconciliation, is it a plus or a minus? Think. Okay, in reconciliation, yes, it goes to the reconciliation. Let me explain. Okay, so cash received from Nuwan 25,000. This is 25,000 recorded as 125. So if you record it as 125, then what happens? This will reduce by 48 to 50. So here it's 148. So minus 100,000. Then only you get this balance. So let's go back to our reason. What it says, due to the error, if the subledger balance is less, then minus. So due to the error, subledger balance deducted more. So it is less balance than minus. So simply remember, right? If the subledger balance is less, minus. If the subledger balance is more, then it's plus. We are not correcting. We are just comparing the balances. Again, I'm telling, very important point. If the error is in the control account, you correct it. Correct it. Okay. Then if the error is in the subledger, we can't correct it. We just compare. It's not a correction, it's just a comparison. Is it clear? Let's do a question. Let's do a reconciliation part. Right. Whether it's clear or not, let's see from a question. So this is the question. You can see. Okay. Okay, can you all do this question? I'll give 5 minutes. So let me know if you're done. I can explain. Okay, so let's check. It's 9:50. Okay, so let's start. Uh, what is the balance of adjusted or revised creditors control account? Revised creditors control account. As of 31st July 2015, trade payables control account appearing in the general ledger of Aminda Fashions showed credit balance of 118,300, while the total of individual account balance as per the payable subledger 118,800. Subsequent checking revealed the following results. So we have creditors control account opening balance brought forward is 118,300 credit, right? And the subledger total balance. This is the creditors ledger balance. This balance is 118,800. Right. There's a problem in my end. Hope no, it's okay. Right. Okay, first one. The total of discounts received for the month of July 2015 amounting to 11,700 has been entered in the control account correctly. So there is nothing wrong in the control account, but has been entered in the individual payable accounts. Has not been entered. So not being entered means it's a deduction. 11,000 not deducted. 11,000 is not deducted in the individual account. So individual account balance or the creditor's ledger balance is more or less.
Less. Less.
Individual balance is more because they have not deducted. Therefore, we need to add omitted discount receipt. A credit balance or a debit balance is not recorded. Discount received is a deduction. Discount received is a deduction from the creditor's account. So that was not deducted in individual account. Therefore, the individual account balance is more. So you add. Individual account balance is more. So you have to add. Okay. Second one, this is where most students get confused. Plus minus and the debit credits. Okay, again, the list of balances of individual account of payable subledger has been overcasted. Overcasted means overvalued, added more, plus or minus. Over, again, individual balance is more. Then again, that will be added.
Add.
Yes, it will be added. Overcasted creditors list balance. That is also reconciliation. Number 3, the purchaser's day book has been overcasted. Okay, so this is another scenario. If the day books are overcasted or undercasted, if the day book, right, day book total balances will be taken to the control account. So simply you can remember, if the day books are overcasted or undercasted, it will affect only the control account. Day book total is more. So day book total is overcasted means where do you record purchases? Purchases in the credit side. So if it is more, we have to deduct overcasted purchases. This will debit overcasted purchases. Then number 4. During the month of July, an amount of 2,700 payable to Superfashion. A supplier has been offset against the receivable from them. This has been correctly recorded in the individual ledger, but it has been omitted from the control account of the general ledger. So what is the double entry for setting off? Control account, debit. Deduct from the creditors, deduct from the debtors. So it will be debited here. Any doubts? Final. Last one. A cash payment to supplier amounting to 4,500 has been correctly recorded in the control account. So nothing wrong in control account. But no entry has been made in the individual ledger account. So this is a cash payment. If the payment is not recorded in individual account, the individual account balance is more because it was deducted in the control account, but not deducted in the individual account. Therefore, it's an omitted payment to supplier. And that's all. So we take the closing balance. Credit side is more. So $95,600. Answer 118,800. So this is terms. 118. Is it clear? Did you all understand now? Okay. So right. Then we'll conclude from this. Okay. Tomorrow I will do the recent past papers 2021 and 2020 related to this, and we have to do I will explain bank reconciliation, error corrections tomorrow, and we'll do some past paper questions. If anyone is not in the Google Classroom, drop me a message. I will add them. Already I have added some students, they have not accepted, right? So if you all have issues in login, drop me a message. I will fix them. Okay. Right. So we'll conclude today's session. I'll see you tomorrow, same time, 6 o'clock. Okay, take care. Good night and God bless you.